Weekly chart, looking for a trend. Do I proceed to the daily, 4 hour, 1 hour? Is there an easy way to recognize a pattern, flag or pennant? How should I set my buy stop, sell loss, stop loss, target? I know you go over this in your material, but I guess I'm asking for a GPS map. Start here, go there, turn next right, with at least one trade scenario. I think once I go through all the steps from start to trade, I can then duplicate and refine my efforts for each trade thereafter. Okay. This, you know what, I'm going to answer the last couple of questions and I'm going to come back to this because this is something that's very important. In fact, I'll probably break this out into even a separate video with a handout package as well. Okay, after 19, after seeing a pattern and going down to the 15-minute to place an entry, is it better to stay on the 15 minutes and monitor the trade for momentum and volume, or better to go back to a 1 hour time frame to monitor the trade? My suggestion would be to flip back and forth. What I would suggest is if you get in, let me go to the 15-minute. If you get in, say you're looking at the trade and you went long over here, okay? And this is a 15-minute bar. And then I would say, especially for the first 45 minutes, okay? 45 minutes, monitor the 15-minute bar. Okay, so for 3 bars. Now in this particular case, if I would have gone long on a breakout here, meaning if for some reason I was targeting the high of this bar, so the market pushes above, I go long, and this bar happens, I'm gone, baby. I am not sticking around to wait and see if this trade is really going to move against me. I just want to be out and use a breakout above that high. Then once the 45 minutes has gone by, what I would suggest is place the 15-minute side by side with the hourly, because if you focus too much on the 15-minute, you can really start to get blown out of the water. What am I trying to say? Just because it's such a small time frame, and well, let me give you this is what I'm trying to say. I'll just go ahead and measure it. Okay, this move here is 143 pips. Okay, this move here is 143 pips. Okay, so you see this move on the hourly. You see it's the same move on the 15-minute. Well, when you see that move is the same, okay, you start to think that all the moves are the same. So then you start to see this move here is up 34 pips, and you start to think that's the same as this move here, or not that move is the same. You start to think that is the same move as this one here, which is 84. Okay, now some of the moves will be the same. Okay, this little pop up here, that was over about an hour, was the same as this little move right there. But, our brains, we like to believe that we're logical and everything makes sense, but quite often we don't associate information in the correct way. Okay, so while we look at this move and we see, okay, this and this is the same on the hourly bar as this and this. And then we see, okay, well, this move here, this little move, is the same as this little move. So then we just make a blanket, a blanket association now, where we start to think that now this move here is the same as maybe this move. Now I'll tell you the reason why. The reason why is because you see a big bar here and you start to see big bars here. Okay, it's the way we perceive information. That's why I would suggest mixing them up.